Thanks for coming to our third installment of Let's Talk Tech. We are very excited to have Mr. Mostafa Seif with us today, who is an expert in the fintech world. Just last week, we had Highland, which started as a ride-hailing app that went into the microservices kind of fintech and microservices kind of businesses to keep alive during the pandemic. So we'll wait for about 2 or 3 minutes for people to join, and we'll move forward from there by introducing Mr. Mostafa Seif and the talk and the agenda for the talk that we'll have, and we'll move forward from there. All right, not to waste any more of Mr. Mostafa Seif's time, let me introduce the talk first. So, this talk is going to be about AI and fintech. So, fintech has proven to be a very big market in tech and in the whole world in general. It has been valued at billions and billions of USD, and it's only growing. COVID-19 has only helped the fintech world grow further and further. So we bring you the lead tech developer at EFGHermes to help us understand this vast field and the major talking points that he will be touching down on are involving AI and fintech. What is fintech at a fundamental level? And what are some of the booming technologies that currently exist in fintech? So, without further ado, I give you Mr. Mostafa Seif.
Okay. Good morning, guys. Thanks, Ibrahim, for your intro, and I am very happy to be here today. My name is Mostafa Seif from Egypt. I'm working as a software tech lead, VP level at EFGHermes. I have around 12 years of experience on software development. 8 of them on software development related to financial industry. And recently at the last 3 or 4 years, I specialize on fintech projects. I will be here today to discuss with you what is the fintech industry and how data science be involved on this industry. So Let's share my screen now. Okay, my screen shared. Okay, yes. Firstly, as I mentioned, today we will discuss how using data science in fintech industry. Today's agenda will be as following. Firstly, we will discuss general discussions about what is the fintech and who have any information about fintech and any previous knowledge. Then we will move forward to discuss how fintech changes the world, how fintech make impact or influence on the world and general industries. Then we will move forward to discuss the main factor to success any fintech projects. Anyone who need to open a fintech startup, what is the main factors to success these projects? Then we will move to the most exciting part on these presentations as the engagement between fintech and data science. Then we will discuss the main use cases for this engagement and end up with the live use case from our company. So let's start with the first questions and discuss what is a fintech. Anyone have any information about fintech? That's okay. Okay. Financial technology or fintech, it refers to a set of technologies that focus on new ways of delivering banking and financial service to consumers. It is the engagement between financial service and information technology, how to use the information technology to execute the daily transaction or daily financial transactions during the days. When we try to using something like PayPal or Amazon Pay or any credit card to make a payment online, you and the consumer and the bank and the e-commerce company are shared or using the fintech to achieve these transactions to be happened. And over the time, the fintech has evolved and it will hit all and almost all aspects of financial services, including something like payments, something like investment, consumer financing, insurance, securities and stock markets, and something like cryptocurrencies. We will need to know what is the impact of fintech and how fintech changes the world, how fintech make tangible changes in the world. To discuss this point, we have three main fintech pictures or fintech implementations, like lending, like payments, like investment and saving. Let's start with the first applications of lending. The lending on the fintech, traditionally only banks were allowed to perform lending transactions with individuals or business organizations. The banks who have the full authority to make the lending to any borrowers or anyone who want to make his startup and he need funds, so he go to the bank and request from the bank to have a fund from him or have a loan. So this is a traditional way that banks can deal with consumers or deal with individuals. To be able to borrow money from the banks, individuals and business would have to implement all the requirements necessary for the loan, including business papers, property to be mortgaged, proof of ability to pay the loans and the installment of the loan in the future, all the related documents the bank needed to guarantee his rights or guarantee that this consumers will be in the future his installments. So this process is take long time to be happen, and this problem is very traditional problem and have many problems in executing. So what is the problems of this traditional methods? What is the many challenges of this traditional methods? Three main problems on lending problems current or in current lending problem architecture. The process of lending from the banks was relatively complex and difficult for most individuals and business organizations because there are many hassles of paper details and many hassles of guarantees the banks need from the consumers. And in case of individuals or small firms with low credit ratings or no collaterals, the chance for this type of clients that they could borrow money from banks were extremely low, were very extremely low. And on the other hand, what has happened in case of the client didn't have any credit history? If the client didn't extract any credit card or any loan from any other banks before, so it's very difficult to the current lender to evaluate this client and estimate what is the approval limit I will give it to this client, because I guarantee that he will pays his installments in the future. It's very difficult scenario. And the answer of these questions will be answered on our live use case. Okay, the solutions for the lending problems is imposed on two models. The first is the peer-to-peer model. The first breakthrough for this lending market was the introduction of peer-to-peer lending or P2P model. And P2P can be seen as a new generation of fundraising model that's formed based on the link between many computer systems via networks with the high security levels. Many lenders can raise money to finance loans for many borrowers, and the borrowers can easily apply for the loans by filling the online loans applications without providing other relevant document, as well as mortgaging their assets. You can now going to any internet bank and admit for a new loan. You can submit your documents online, and the loan process will go easily than traditional ways. Use case of this lending architecture is value. Value is a mobile application. One of the successful use cases in Egypt is a mobile application that's used in consumer financing business. The customer can use Value Mobile to make installments for his payments or his products he need to buy it. And the strategy of the value is buy anything now and you will pay later. The key factor of this application is how to avoid all lending hassle details and grant the consumer instant approval for this for his credit limit. And this is the difference between value application and any other lending process. Value application is give you instant approval for the limit without any hassle of paper documents and you need to wait 10 days or 2 weeks to finalize the estimation for this approval limit or his approval limit to guarantee that you will pay your installments in the future. So how is this operation done? How is this operation happen? In new lending architecture, the borrower try to download the app and fill all required documents. Then it will send the lending request to the lender. The lender try to send a credit score request to make inquiry for this client using something identifiers for this client, like national IDs, like any IDs. and the credit score companies that hold main informations about the clients will send the response to the lender with the scoring number. But this happened for all clients who have credit history, who extract in the past credit cards from other companies and report the delinquent rate or how this customers behave on paying his installments. But on the other hand, if the client no credit history or didn't have any credit history, what happened in this case? What happened in this case? So the client will also download the app and it will send the lender. So the credit score respond with no data. Then it will be make manual evaluation for this client, and after that the response will return it to the lender. And after that the credit limit detected for this client. So the manual evaluation is very old techniques or traditional techniques. So we need to remove this part or enhance this part on our architecture, and this will be done in the use case or in the live use case. Okay. Let's move to other applications from fintech is the payments. The payments or fintech changed the world of payments. Instead of going to the banks to perform all payments transaction, today with the development of fintech products, customers can comfortably perform all their payments whenever they want in a simple and faster way through many online financial services. Today, at the beginning of any month, all of us going to any payment service providers and try to pay all bills or all invoice like electricity, like telephone, like mobile, and so on from his page or from his mobile app. Okay. The main pictures for payments is two: peer-to-peer online payments and mobile wallets. And peer-to-peer mobile payments, B2B online payments helps the counterparts transfer money from their bank accounts to other bank accounts anywhere and anytime through the internet or the smartphones having the network connections. As I mentioned, you try to enter your credit card and make your payment. And most of merchants now accept online payments through their websites. There are many payment service providers, companies in Egypt like 𝐓𝐢𝐬𝐬. But how is this model done? How is this model performed? Firstly, the client going to the website, he need to buy something from it and enter his credit card details. Then this credit card details will transfer to payment gateway. The payment gateway make some identification and verification of bank info, like what is the type of bank, to make routing for the right bank he need to withdraw the amount from it. So the payment gateway attached with many banks, make deals with many banks to make routing these transactions on it. And the transaction happen on the bank by transferring the money from client bank account to seller bank. Other image of payments is mobile wallets. Now we have any wallet that include many plastic cards or many physical cards that from many different banks, and this is very traditional way for our wallets. But the mobile wallet is a digital wallet which uses technology to store the digitized variables such as the debit cards or credit card that allow the customers to make in-store payments quickly and securely. The key purposes for inventing this payment method are to completely replace the physical wallet. which people allows carry in their pocket, enhance the convenience, speed, and secure for the users, as well as try to build the cashless society in the future. The use case for this mobile wallets also value implement it, but it is not as the image as keep tracking with debit cards and credit cards. It is the virtual wallet that include different type of amounts in the app. Like you can have many different type of balances inside value application. Like the balance I grant it to you from the lending process, or your credit limit, the balances you have from any cashbacks or from any offers you accepted. So we build an e-wallet system that include all this value amounts. After client grant approval limit, the e-wallet created on his mobile and stores the approval limit on it without any physical card use. You can use the limit and submit any order via mobile app. The transaction, when we need to make these transactions, the transaction transferred from mobile application to merchant point of sale using QR code. You just need to scan QR code on merchant POS, and the transactions will transfer from your mobile application to POS. The merchant can accept or reject this transaction. Once merchant accepts these transactions, the transaction amount will be deducted from your limit inside your value wallet, and you can buy the product or finalize the process of these transactions. This is snapshots from value applications. This is the limit granted from the lender, and this is the cashback. This simulation for the different amount types in value application. This is the credit limit. This is the cashback amount, and another view for the wallet as pie charts. Okay. How can you transfer your credit limit to cash limit? This is a feature on value application, and it is internal product developed as a fintech product inside value application. How I can transfer or buy part of my credit limit or my loan I granted from the lender and convert it as a cash, as my own cash. I can use it on buying something. I can use it to transfer it to another client or another colleague or another friend. So how can this done? When you introduce new product called 𝐃𝐚𝐭. 𝐃𝐚𝐭 is internal product inside value. It allows their clients to buy a virtual e-gift card using their limit and transfer it to their own wallets. You can transfer the 𝐃𝐚𝐭 balance to your friends or buy any products using it. But we have a questions on this point. How value make a profit from this product? How value, what's the benefits for this products? Value take interest rate on this products. When you buy this gift card using your credit limit, I will take interest. When I transfer this amount from one client to another client, I will take a transfer fees. Also, when I transfer this amount from value client to another friend or another colleague, I expand the customer base for this application. So this is all benefits from this thought. Okay. At the end of this introduction about fintech projects, we have to put up some points that what is the main factor to success any fintech projects? How I can make a successful story for this fintech projects? Mainly, the first step is to minimize the client onboarding process. I need to minimize the steps for this onboarding process for the client, and avoid using papers and documents. Second step is minimize the client transaction steps as you can. You didn't need to make cash transactions. the transaction must be digitized. 3, find the smart ways to expand customer base. 4, focus on customer retention and loyalty program, because the cost of attracting new clients and get new client to or expand my customer base is very expensive than keeping him. So to achieve this fintech projects, how? We need to make fintech and data science engagement. So, and this is the main topic for our presentation or our session today. How fintech and data science engagement done. Firstly, I need to know that the huge amount of data generated from different data sources and force companies to use it to solve the critical issues. There are these applications or these online applications generate huge amount of data, like data related to client profiles, like data related to transactions, related to consumers. And using data science, you can make data insights and explore new patterns to help you solving your business problems. Let's explore what is the main use cases data for how data science engage in fintech industry. There are 4 main use cases. The first one is credit risk scoring. How I can make credit scoring using different techniques, as I mentioned in previous slides. Fraud detection and prevention, portfolio optimization and asset management, marketing, customer retention, and loyalty program. The most exciting use case on these 4 use cases is the credit risk scoring, and it considered the most important use case for any lender or any financial lender provider. A credit score, what is a credit score? Credit score is a statistical analysis that predicts a person's credit worthiness based on their past credit details. This value is used to determine whether a loan should be given to this person or not. Traditionally, banks use complex statistical methods to determine the credit score of individuals. However, the rise of data science has led to the introduction of advanced techniques such as machine learning and deep learning algorithms that provide estimates with higher accuracy by using a large data points, using many data sources like profiles, client profiles, and transactions, and client transactions, and so on. How Value App handles this use case? We will answer this on the live use case section. Okay, let's move to the second, fraud detection and prevention. We know that the fraud costs the financial industry about 18 billion per year, according to the consumer reports in June 2011. Currently, fraud detection is based on certain rules, such as flags that are triggered based on the location for the client, location of the transactions, ATM or IP address used. Instead of relying only on a finite number of transactions, the process can be improved by using machine learning and deep learning methods, such as logistic regression, such as naive-based classifiers, and so on, from machine learning algorithms that can compute the probability of a transaction being fraudulent based on the patterns in the historical transaction data. The third use case, and it's very important also, is the portfolio optimization and asset management. How to make asset management and use data science for asset management estimations, and make portfolio optimizations for the clients. how to maximize the profit for the clients. Portfolio optimization and asset management are key functions performed by fintech institutions. With the rise of big data and the large amount of data generated every day, these institutions can crunch a massive amount of financial data to build asset management models based on machine learning models. Let's take the use case of the stock market. Data science and AI technology used to predict the stock market price and provide traders with online recommendations during the stock market session to maximize client portfolio. Also, sentiment analysis and the sentiment of the market, especially on the countries who have many events every day, like Egypt, مثلا. Sentiment analysis is also used to analyze public data to judge market sentiment and short the market whenever any natural and man-made disaster strikes. This process can also be fully automated, which can further reduce the costs for these institutions. Okay. You can use data science to predict stock market price and using multiple data sources to achieve high accuracy. And in 2018, a machine learning model has been built to handle this by using two types of data, the historical prices and combine it with the Twitter data to predict the stock market trend. This is a paper, I published it in 2018 that demonstrate and discuss this model. The mentioned model on this paper is as follows. As that we have three data sources. The three data sources are big data acquisition from these three data sources, the historical prices, the market news, and the stock tweets. And we store all this data on HDFS as the data storage Hadoop file system. Then we move to the data analysis board by making data pre-processing, make feature extraction, make data classification, and extract a model that makes stock market binary classifier, give recommendation buy or sell for every stock, and make final decisions. The result return back to the HDFS to make retraining again for the model. In the real time, this is all about the training time, and after session retraining. But on the stock market, data returned from the market and enter to the data analysis part to make classifications for it. Okay. The last case study was the marketing and customer retention and loyalty programs. It is a very exciting part and very important part for any company. After running the fintech projects, as I mentioned, a huge amount of data generated from this app related to consumer profile and the consumer transaction. This data can be taken into consideration to boost marketing efforts by providing contextual and personalized product advertisement by sending a specialized offer for a specific client. When we enter any mall and be near for specific stores, we note that our push notifications increased on the mobile, and a push notification happened related to the place we move near it. Furthermore, this information can be used to better target future customers, thus optimizing the marketing expense of the company as well. Let's move to our live use case. On value application, we have a challenge that we need to extract or need to expand our customer base. But what happened about non-banking clients? What happened about clients who didn't have any credit history, or how I can evaluate the client who didn't have any previous credit card or any previous loans? We developed two models in our company related to this problems is the alternative scoring model and delinquent model. Current scoring architectures that the client going to value application and send request to iScore or send request to credit score. And the credit score company data returned from credit score will enter to credit limit calculator. The credit limit calculator will respond as the approved limit for the client will be 1, 2, 3, 4. And this is, as I mentioned before, this is the architecture in case of the client didn't have any credit scoring or have any previous banking history. But this manual evaluation have drawbacks. The main drawbacks is that it takes more effort. It takes long time to handle a client. Maybe not accurate due to lack of features used to take that decision. So we solved this issue by developed two machine learning algorithms and inject data science on this solution architecture by removing manual evaluation and using the alternative scoring model and delinquent model based on previous data from previous customers. The architecture will be modified as the client download the mobile app and request to get credit limit. The request will be forwarded to credit score inquiry company. Then, if the client has credit scoring, a calculator will execute some rules and return back to the credit score services to detect the approval limit for the client. But in case of the client didn't have any credit history, so the request will return to or go to the alternative scoring model. The alternative scoring model will detect what is the eligible limit for this client, and after that, I will evaluate if I give this client this approval limit, what is the delinquent or future delinquent rate for this client will be. So if I give this client 100K, so this client will be current delinquent rate, or it will be or he will delinquent by 1 week or delinquent by 2 weeks. So the delinquent response will return to again to the model, and the alternative scoring respond to the mobile applications that the approval limit will be 1, 2, 3, 4. Okay. This is about ES model. ES model is a machine learning model that used to predict eligible limit bracket for clients who not have iScore. ES model is a real-time prediction integration model that depends on action occurred from user to fire trigger and run prediction model using data collected from multiple data sources. Okay, and the delinquent model is a machine learning model used to predict the delinquent rate for clients after taking predict eligible limit from ES model, the stacking models. Delinquent model is a real-time prediction integration model that depend on action occurred from users to fire trigger and run prediction model using data collected from multiple data sources. This is how ES model work. The request initializer, credit limit service, then get data from different data sources. The two data sources will enter to ES model, and the result from ES model will going to delinquent prediction model. Implementation challenges here was the number of data set is it's not very low, but it's limited. When we make checking the data balance, we find that the classes is differentiated or not balanced according to the label. And we think how to overcome this challenge. We're going to data sampling techniques and using something like smart data sampling technique. In small data sampling, we find that this is a point and this is another point. We take all the points related or between these 2 points. Find all the points between these 2 points, and this is a new point, not repeated point from another data points. Then we make model selection. After examination of multiple models, the best model fit the dataset was the random forest classifier, and we achieved accuracy. It's ranged from 0.7 to 0.8 according to K-fold validation. We make our model validation using K-fold validation, and as I mentioned, the accuracy achieved was between 0.7 and 0.8. Okay, I am finished. Any questions?
All right, so now we'll open the floor to questions. Yeah.
Okay.
So if anybody has some questions, please put them in the chat. Guess we'll give it another 10, 20 seconds.
Okay.
Okay, I guess no questions to be asked. All right, thank you very much, Mr. Mostafa Seif, for a very, very informative talk. I think a lot of us will have learned a lot through the live stream, and a lot of us will view it later on and for future purposes. I guess a lot of people will also be excited to enter the world of fintech after hearing this talk. Hopefully we get to see you soon, and thank you very, very much. All right.
Thank you all, and it's my pleasure to be here today. And I hope to repeat this this meeting on other times. I hope to be useful and give information about the topic or cover the topic from different areas. And thank you.
All right, thank you. All right, guys, see you guys later. We'll end the stream.